The UK is in somewhat of a depression. So the company I want to talk about today, it's an insolvency funder in the UK. Now that bankruptcies in the UK are at record high levels, I believe that Catalyst will act as a tailwind to improve the stock price. I believe the upside, if everything goes all right, will be around 500%.
Our friends in the UK seem to be going through a bit of a troubled period with the economy in the dumps and a lot of companies going bankrupt. But as they say, all dark clouds have their silver lining. Today I'm talking to Alberto Alvarez, who seems to have found that silver lining. In this case, the opportunity comes in the form of bankruptcy financing, which seems to be in an early bull market just a couple of years after the moratorium on bankruptcies was lifted. We'll get to that in a moment, but first, if you haven't already, make sure you take a second right now and subscribe, because that's the best way to tell me to keep making content like this. And now, Alberto Alvarez. Alberto, so what company do you want to talk about today?
So the company I want to talk about today is called Manolete Partners. It's an insolvency funder in the UK. I believe it's a very attractive opportunity because due to government measures, their stock price went unreasonably down. And now that bankruptcies in the UK are at record high levels, I believe that Catalyst will act as a tailwind to improve the stock price. I believe the upside, if everything goes all right, will be around 500%. And even if everything doesn't go as planned, I don't believe we'll lose anything.
Interesting. So that's quite a good flip of the coin there. You know, heads you win 500%, tails you don't lose anything. That's, I think, Monish Pabrai would really like something like that. It sounds like a pretty interesting setup because, you know, I read your report on your Substack and you said that the UK government, they put insolvency on hold basically for a year or two, and things are getting basically back to normal now. Why don't we dive a little bit deeper into this opportunity? Why don't you tell us about the company's background? How long has it been in business? What's going on exactly with the situation there in the UK? This episode is brought to you by Event Driven Daily. If you're spending too much time trying to uncover special situation stocks, make sure to look at Event Driven Daily's Morning Brew newsletter. Each month, we scour the internet to find as many special situation opportunities as possible, and then send each and every special situation to free subscribers in a neatly packaged email. This service is absolutely free and will save you hours each month trying to source special situation ideas. Go to www.eventdrivendaily.com and look for the subscribe button at the top of the page. That's www.eventdrivendaily.com.
So the company was created at quite a good time. It was created in 2009 by Stephen Coughlin, who is the current CEO of the company, and Mike Faulkner, who was the CIO of Rebound Mercantile, which is a pretty large asset management firm. And since then, the company has been an extremely stable business. They had an average net income of around 12 to 15% historically, which is extremely good for the business they're in. Because when people hear insolvency funder, they think counter-cyclical. So they think that Manolete would only profit if things go badly. And actually, you see the opposite. The best year they have ever had in terms of business, aside from this year, like right now they are at record high revenues, but in terms of profitability, the best year that they've ever had was 2019, which is interesting because in 2019, everything was going fine. So a bit of information about their business. Manolete Partners, even though you might think of it at first as a litigation firm, is not a litigation firm in the conventional sense of the word. What they do is they buy outright the claim to the insolvency, and those tend to be pretty small investments relative to other firms. For example, some of your viewers may have heard of Litigation Capital Management or Burford Capital. Those firms invest very commonly millions of dollars, millions of pounds into each claim. Manolete has an average investment in the thousands of pounds on each case. So they tend to be pretty small investments, but they make a lot of them. And they have a completion rate of over 90%.
Mm.
So even if a few claims go wrong, it doesn't affect their bottom line. And furthermore, a lot of their claims tend to be related to malpractice, sometimes to fraud. And those claims tend to be very profitable because I don't think they have much competition in terms of companies looking to buy outright those claims. That's why, in terms of third party funding, they have an over 60% market share, which is extremely high. So in 2020, COVID hit the UK, and the government, which back then it was run by the Tories, by the Conservative government, they did a bit of a strange decision, which we could kind of think alike to the Soviet Union, where happiness was a law. By law, you had to be happy. In the UK, by law, you couldn't go bankrupt, even though, of course, with COVID, many businesses were bankrupt, essentially, especially smaller businesses suffered a lot. The UK decided that they were going to limit by law the action of businessmen. This law was dissolved 2 years later, around 2023. And by then, insolvencies just skyrocketed. There was this, call it like champagne bottle effect, in which the bubbles started to flow a lot further than the actual wine. So you had a sudden massive increase in bankruptcies, which led to the current situation in which we are seeing a level of bankruptcies not seen since 2009.
Mm.
In fact, there are more companies going bankrupt now than in 2009. Furthermore, if you look at the situation in terms of individual insolvencies, so people like households going bankrupt, there are more lower income households going bankrupt than there ever was in 2009.
Mm.
So even at a micro level in the UK, the situation is really, really difficult. And this tells me that it's not strictly about what the UK government did. So it's like the situation we have now is not strictly about the UK government banning insolvencies and then once they were legal, they just exploded. No, I think there's something deeper there. I think the UK is in somewhat of a depression because this level of individual insolvencies and company insolvencies are not normal in this time of the cycle.
Now, I know that depression doesn't mean like 1930s style suffering,
No.
but it does mean suffering.
So the UK right now is going through economic growth. So it's below trend, which is the definition of a depression, coupled with a weakened currency. So they have a hard time importing things, which is a really difficult situation for a Western country since we import in the Western world most of the goods we consume. So that's leading to a really, really difficult situation for the average household and the average company. The only ones who are yet to be seen as having a hard time are very large businesses.
Interesting. Yeah, we kind of farm everything off to China and ask them to build it for us, make it for us, then import it in from them. So we can claim that we have, really low CO2 emissions.
Yeah.
This is kind of a sleight of hand, but
exactly.
Yeah, that's pretty interesting. Lower Great British Pound, I guess, causing big problems there. Now, you mentioned in your initial write-up, I think it was March 2024,
Yeah.
that 10% of councils in the UK were planning on or expected to go bankrupt basically over the following 12 months.
Yeah.
Where are we with that? What happened and where are we now with that?
So in terms of local councils, some of them have been bailed out by the government. In general terms, they're delaying as much as possible bankruptcy just to avoid a political catastrophe. In the last 5 or so years, the UK has gone through so many prime ministers that the country is a bit in a turmoil in the political sense. So for those of you that don't know, the Conservatives won by a landslide in the previous election. Everyone was just torn apart because of Brexit. They just wanted Brexit to be over and done with. And with the Tories, unfortunately for the UK, things just seem to get worse. There were many political scandals. And in the last election, the Labour Party actually crushed the Conservatives. And people thought that was for good. People were tired. And it turns out that the Labour Party has not been any better, both in the economic sense, as the UK is pretty much walking the thin line between stagnation and recession, and also in social terms, as pretty much there's every week in which there's someone in the UK getting imprisoned for something they say on Twitter. So people are a bit scared in that sense.
I better not go to the UK then.
Yeah, me too. So yeah, to answer your question, the local councils have been delaying with all the means necessary their insolvencies.
Okay, interesting. So they kind of put that on hiatus. Now, what are we expecting over the next 12 months?
You mean in terms of Manolete?
Council insolvencies and also business insolvencies. One thing that you also mentioned in your article is that 22% of companies in the UK were expected to have to refinance in 2025. And rates are substantially higher than, I guess, where they were 5 years ago. So where are we in those two issues? So with councils possibly going insolvent over the next year and with the refinancing, what are the implications there?
So I think in terms of the councils, I think the Labour government will be a lot more generous when it comes to giving them money to stay alive. So in that sense, I'm not very optimistic. And of course, here I have to choose my words carefully, because for me, it would be beneficial for these councils to go under. And I think honestly, it will be beneficial also for the UK, because I don't think there's any point in keeping an insolvent entity alive. But yeah, I think the Labour government will be more generous with them than the previous government. And in terms of businesses and the refinancing, I think that now that rates have dropped a little, I think they have somewhat of a better time. But I'm starting to see an uptick in larger businesses getting insolvent and larger businesses getting caught for fraud.
Interesting.
I think that the Labour government is being a bit more strict in terms of fraud. So I think you're seeing a bit of an uptick there, and that is beneficial for Manolete. Fortunately for me, all of this is public information. The UK government has a great website called the Insolvency Service, where daily you see news of fraud and malpractice from companies and from directors being published, as well as great statistics being published for free. So if any of you want to dig deeper, that is pretty much where I get all my information. And during the next 12 months for Manolete, I think we'll be seeing great results, because I don't know if you want to dig a bit deeper in how the company actually works.
It's probably pretty good to dig into how the company works, just to give a good understanding what we're talking about and the possible implications.
Sure. So the business cycle for Manolete is 2 years. During the first year, they invest in the claim, and the claim is completed. So the insolvency process, the administration process is over. And so that happens in the first 12 months. Mm-hmm. So let's say that today Manolete invests in a claim. In 12 months, that legal process is over. After that, it takes them another 12 months to get paid. So if you consider that they have a 90% plus completion rate, all you have to do is look at their investments, add 2 years, and you'll find out what cash flow they will have in 2 years.
Interesting.
So in that sense, it's an extremely predictable company, and you could liken it more to a bond than to a company, because I can pretty much tell you that, for example, during the next 12 months, I think that it's almost impossible that in 12 months' time, so when results are out, let's say in September or August 2026, I think it's almost impossible for Manolete not to have made £2 million of net income. And that is something that I think is going to become a lot more important as time goes through, because I think that the macroeconomic situation is going to worsen. Although, of course, it's impossible to know. And as Warren Buffett says that every 10 minutes you spend thinking about macroeconomics, you're wasting 90 minutes, right?
Yeah.
So I believe that the predictability of profits for companies going forward is going to become very difficult. So having a company like Manolete in which you can predict 2 years ahead how much money they're going to make is extremely useful and extremely profitable.
So I'm looking at the stock chart right now, and it was actually trading fairly low in 2019, I guess. And then it shot way up and all the way up to about 500 or so. And then there was about an 80% decline going to, I believe it's the end of 2024 or beginning of 2024.
Yeah.
So, yeah, so that's quite a big drop. Now, I'm a novice when it comes to the bankruptcy cycle. So I don't know much about that. I know a little bit about the interest rate cycle. They tend to be very, very long cycles. We're talking 25 years up, 25 years down kind of thing. What about the bankruptcy cycle? Obviously, we reached a bit of a trough in 2020 when there was no bankruptcies. Would you agree with that? And where are we in that cycle?
So the 80% drop is because the UK government banned insolvencies.
Mm-hmm.
And because of this lag in the business cycle. So since insolvencies became legal again in 2022 and 2023, because of the business cycle that is 2 years long, we are starting to see now the result of that legalization of insolvencies.
Mm-hmm.
So that is a prime reason why the stock has gone down so much. In terms of the cyclicality of the bankruptcies, it's very much tied to economic growth. Mm-hmm. But here's the good thing about Manolete, and I think this is one of the most misunderstood things about this company, is that the company doesn't care much about how many bankruptcies there are. Of course, if there are a lot, it's great. But as I said, in 2019, there weren't that many bankruptcies, and they delivered record high net income. So for them, they have created a business model so they deliver net income regardless of the point of the economic cycle. What Manolete needs, and I think this is where the cycle is lagging. What Manolete needs is more companies going bankrupt. More larger companies going bankrupt. Because in the larger cases, in those is where the big margins are made.
Okay, so it's not necessarily the number of companies going bankrupt. It's the size of the companies going bankrupt because they can make bigger bets, make higher margins.
Exactly. So right now, for example, revenue is at an all-time high, but profits are not. Mm-hmm. And the reason behind that is that there is massive volume. So there is a massive volume of companies going bankrupt. They're seeing a record high inflow of basically the bureaucrats in the UK that administer the companies when they go bankrupt. Well, sorry, let me take a step back. In the UK, when a company goes bankrupt, there's this figure called administrators that go in and take over basically the operations of the company to liquidate the company, essentially. These are the government workers that then contact companies like Manolete to finance part of the process. And because Manolete has one of the best track records in the industry, they get inquiries as to if they can get involved in this process or that process of insolvency. So the level of inquiries is at a historically high level. Like they have never received such level of petitions to go into business, basically. But that is not what the company needs. The company needs larger cases. And we are starting to see an uptick there, especially from the construction industry and all the industries that surround the real estate industry. But it's a slow uptick, but it's getting there. And but it's great to see that the business model is so versatile that they can make money even on higher volumes, even if the cases are smaller. So that is good to see.
So I guess as the deals get smaller, as the companies get smaller, you have a lot less efficient SG&A because, you're getting less money per dollar of SG&A spent. Is that kind of how it works here? And then in the larger companies, you're spending less SG&A, less management expenses on a bigger payout. Is that kind of how it works?
To some extent, but in general, it's a very efficient industry. You don't need a large headcount to manage the business. The problem is that, let's say that in a smaller case, there's 1% margin, just simply because for the amount of money you have to invest to, let's say, litigate against the directors, you need to make a lot of those cases work. Whereas with a larger company, you could essentially make a 10% margin with very little effort because there's such a massive amount of money to be made. For example, and this was a one-off, the one I'm going to say for Manolete, but some years ago, Manolete invested in basically car companies that were involved in a cartel case. So kind of in a price fixing accusation. And they invested quite a few £1,000s. I think it was maybe in the low hundreds of thousands. So a pretty large case for Manolete. And they just got the first installment of the investment bank, sorry. And it was £3 million. So they made like 7x already in their investment. And I expect there's £10 million incoming still from that investment. So you can see the kind of returns they can get in larger cases from that investment. It's an insane multiplier.
So what type of market cap are we looking at here?
For Manolete?
Yes.
Oh, it's super small right now. Like I think right now they're trading at a £34 million market cap.
Oh wow.
On a 33 million revenue level.
So if you're making 10 million pounds, then that's it's quite a lot of money versus your market cap.
Yeah. So with that 13 million pounds they're probably going to get, they're going to wipe out all their debt. And after that, I expect dividends.
Okay.
I don't expect buybacks because the share structure is pretty tight, which I can go now into that if you want. So yes,
well, let me pause you here. I got a quick question before we move into that. Now, you said that they make more money off of larger companies. Now, this is obviously kind of a gradual thing, right? So every step up the market cap level of maybe 10 million pounds or something like that, they'll make a little bit more money, right? But what size of company are you really looking for before they really start cashing in?
We are looking at a type of bankruptcy called administration in legal terms in the UK. I don't know the precise market cap or the precise number of employees, but up until now, we have seen kind of like zombie companies going bankrupt, which has driven volume up insanely. So we are talking about small to medium-sized businesses, and those aren't very juicy in terms of margins. But
is that like 10 employees, 50 employees?
Let's say something like that.
Okay.
But I think that, for example, in the construction business, once we see companies with 100+ employees going bankrupt, we'll see profitability being driven up.
Okay, interesting. Okay, so we have a $35 million company right here, or sorry, 35 million pound company, and they are getting record numbers of bankruptcy cases to deal with, are funding those bankruptcy cases. They're waiting for some larger cases to come in. So would you say that we're now climbing into a bull market for bankruptcies in the UK?
We are.
Okay, interesting. So one thing that I've learned over the past couple of years is just all about the interest rate cycle. And I assume that the interest rates have a lot to do with, these companies going bankrupt. It's not just a sluggish business environment there. It's actually, increased costs on the debts, not being able to maybe roll that debt over in some cases. So what you tend to find is, you go up for 25 years and then you go down for 25 years. And we reached a low in, I think it was 2020 with interest rates. And congratulations to anybody who mortgaged a house in 2020. You got basically investment of a lifetime. But I think what we're looking at here and across the globe, I would say, is a 25-year stretch where interest rates keep going up, basically like they did from the 60s to the 80s, and then, reach some crescendo and collapse again. So, are we looking at a multi-decade bull market for this company?
I think that we would be misunderstanding their business model if we just assumed it was based on interest rates.
Hmm.
I think Manolete should be considered, just to put it into simple words, I think it should be considered a recycler.
Hmm.
So I don't think there's a recycling cycle. I think people throw rubbish away all the time, right? And I think kind of the same happens in business. So every day there's a business going under. Every day there's a large company committing malpractice, and the shareholders have to go against management. And I think that is just the way that life works. And that is where Manolete plays a key role.
Okay.
The only reason we are not seeing yet larger insolvencies is the following. Remember that insolvencies in the UK have only been legal for about 2.5 years,
Hmm.
and larger companies have the ability to issue debt, to issue capital more easily than smaller companies. So they have been able to deal with the hangover of COVID more easily than smaller businesses. But the question is, for how long will they be able to deal with this? I don't know for how long. I think the market is already starting to price in something really ugly. For example, I think a good proxy for the UK market is the stock price of the London Stock Exchange Company. So exchanges in Western countries have been going up nonstop for a few decades. And just this year, the LSE in the stock market is down double digits. So clearly, the market is pricing in a slowdown in the market cap of UK companies.
Mm.
And that will directly affect larger companies because their ability to issue capital will be diminished. So I think time is on our side, and it's a matter of when, not if. So it's a matter of when larger companies start giving up and start to fail. And I think we'll see that in the next 12 months, if not in the next 12 months, maybe in the next 18 months. But I think the situation in the UK is becoming worse quicker than I expected. So basically, I've been invested in Manolete for about 2 years, and I expected to wait around 5 years. So I said, well, maybe in 28, more or less, we'll see massive growth in the net income. I would say we're probably going to be there in 2026, late 2026, maybe even sooner. I don't know. But I tend to be pretty prudent when I make these statements because, as I say, my investment horizon is 5 years. So I take it pretty calmly, as you can imagine. I learned this the hard way, unfortunately, that these things tend to take quite some time.
Interesting. So this is basically a reversion to the mean play. So now that the
Yeah,
UK has stopped enforcing happiness as a law,
yeah,
basically basically things are going to get back to the normal course of business, and bigger companies are going to start going bankrupt, going into administration, and this company is going to benefit. So that's basically what you're saying.
yeah.
Now, let's talk a little bit about the balance sheet. Let's talk about buybacks, insider buys, that sort of thing. What's the balance sheet like here? Because you mentioned some debt. Is this a complete nightmare of a balance sheet? What are we looking at?
Until a few months ago, it was somewhat of a concern for me because they had the maturity of these 13 million pounds in debt coming due this year. So I was pretty worried, not gonna lie. I knew that they were gonna find a solution, mainly due to the quality of the shareholders they have, which we can go into in a bit if you want. I knew that it wasn't the end of the company, but it was definitely a concern. But management is top quality. The CEO is incredible. I mean, you can tell that He has founded this company and he has built it from scratch. And he made a deal with HSBC, which is the main creditor of Manolete, to extend the deadline until 2028. So we have some time to pay off the debt in terms of shareholders. The balance sheet is great. Actually, right now, I would say the company is trading right at net current asset value, which I think your viewers will love.
I love that.
Yeah, yeah. So the current assets are mainly made of short-term investments in cases. So we spoke about this business cycle. So these cases would be on the lower end of the business cycle. So they have been already completed, and Manolete is expecting payment during the next 12 months.
Okay.
And non-current assets are mainly made of the upper end of the business cycle cases in which investments have just been made. The balance sheet is pretty straightforward. Nothing strange.
Okay. Yeah, I like that. Now, what about buybacks, insider buys, that sort of thing? You mentioned the founder. I guess the founder owns a big chunk of shares. What's that stake? Is he buying shares? This episode is brought to you by NetNet Hunter, the best resource for NetNet stock investing on the internet. NetNets, or cigar butts, are sub-liquidation value stocks that produced such outstanding returns during Ben Graham's lifetime that he gave up all other strategies to focus on them. Professionals such as Warren Buffett and Joel Greenblatt also launched their career on the strategy, and that proved quite successful to say the least. Right now, you can get a free monthly NetNet stock pick from NetNet Hunter's free newsletter. Visit www.netnethunter.com and look for the link on the homepage.
Yeah, so the founder, which is an amazing professional, he owns, I think, around 12% of the company ish, more or less. If you look at the historical records, you will see that Steven sold a few million shares around 5 years ago. Some people see this as a negative, but actually he sold a few million shares. So an investment firm from Middle East called Mythica Capital could come into the company. Mythica Capital, for those that don't know them, they are the largest shareholder of Burford Capital, which is the largest litigation firm publicly traded worldwide, and they own quite a chunk of Manolete. The company hasn't done any buybacks, mainly because they have a gentleman called Jonathan Moulton, who is a legend in private equity in the UK, and he owns 25% of the company. So once he crosses certain threshold, he would have to take over the company. So I don't think buybacks are an option. But dividends is definitely something that is on the table, and I think it's something the company is looking forward to it. But first of all, they need to resolve the debt situation.
Right.
So the share structure looks something like 25% owned by Jonathan Moulton, around 50% owned by Steven, the CEO.
Is that 50? Sorry?
No, 15%.
15. Okay, good.
Yeah, 10% owned by Mythic Capital, I think. Maybe it's more. And another 10% owned by a US hedge fund who just bought 10% of the company from one of the founders.
Okay, so this is now at 60% essentially for the big holders, and we're kind of getting into a danger territory. I'm not sure if you've been following the drama over at Annexo. For anybody who's not up to speed on that one, definitely check out the first episode of this podcast. But basically what happened was the largest shareholder and the founder of the company kind of joined forces to take the company private at a big discount. And I think that they had a roughly 60% between them as well. And if they get up to 75%, they can basically force a going private move and then basically offer shareholders peanuts for their shares without any repercussions. Well, it seems so, at least at the date of this recording. Now we're at 60% with this particular firm that you're talking about. What are the chances of a Takeunder? The same thing that's happening with Annexo. Definitely, a lot of people stand to profit if the company does, move 5x up over the next few years.
Yeah, so I mean, of course, it's possible. I mean, everything's possible, right? But I don't think the company is looking to do anything like that. Jonathan Moulton owned already like 20% of the company when they did IPO, and he bought even more shares as the stock went up. And he hasn't sold a single share, even though the company's down like 80%. So he definitely has an interest in the business. And for the rest of the shareholders, I don't think any of them are looking to take the company private. And Stephen I consider him such an ethically responsible person that I don't think he even considers that possibility. And I encourage every one of you to write to him.
He's not a
So
lawyer, is he? I hope not.
So he has been in the industry since pretty much its inception, and he has surrounded himself with people like him. So if I'm not mistaken, one of the members of the management team used to be a judge for administration processes. So he knows the industry inside out, especially from the other side of the aisle, which is great for the business. Just as a closing thought from my part, just to make clear, Manolete has nothing to do with Spain, even though the name is Spanish and the logo is a bullfighter. I asked Stephen about this, and he said that when he created the company in 2009, he wanted, like, he visualized the company as the company that stops kind of like Euphoria. And Euphoria was kind of seen as this statue in Wall Street of the bull, right?
Mm-hmm.
And he asked himself, who stops the bull? The bullfighter.
Right.
And he looked up in the internet the most famous bullfighter, and the name Manolete came up, who was this Spanish man who lived like 70 years ago. And that's how the company got the name. But Manolete has nothing to do with Spain. They have no Spanish shareholders, aside from me that I know, and no Spanish executives or anything.
Okay, that's interesting. Yeah, definitely a nice metaphor there. Now, you mentioned previously that it was pretty easy to kind of forecast the company's revenue and earnings because they make a big investment and then it comes back 2 years later. So what have they done basically over the last 6 months or so? What are the investments that they're making in cases, funding these cases? Is it growing? And what kind of guidance are they giving, I guess, on larger companies?
They're very conservative when it comes to guidance. So I think they don't try to predict the broader market. So they don't try to predict if more larger companies are going bankrupt or not, which I think is great because I don't think there's any point in that. I think they're better off focusing on managing expectations and managing the actual business than in trying to predict the future. And they have been extremely precise in their guidance. So they were guiding for around £1 million of net income in this past financial year, which is pretty much exactly what they got, which kind of gives you an idea of the kind of predictability that management can actually do with the business. And also gives you an idea of why HSBC decided to extend the deadline for Manolete. I mean, they have probably one of the best insights anyone could have into the business. And even though for HSBC, £13 million is nothing, like they would be okay, like asking the company to issue capital or whatever to actually make ends meet. They decided to extend the deadline because they trust the company, they trust management. So yeah, in that sense, guidance tends to be pretty precise, and they don't give much of their opinions on the broader market.
Okay, fair enough. What about the investment side of things?
So investments have been pretty stable, although they pretty much hold no cash, which I think is an insight on the level of opportunities they're seeing right now.
Okay, that's awesome. Any other opportunities that you're really eyeing right now? Do you have any other special situation or event-driven opportunities?
Had you asked me a month ago, I would have said Mongolia Growth Group, which I know you know about.
Right. Yeah.
But literally this week, the company decided to liquidate, which is something that I had been anticipating for the past year. So that's pretty much over, unless the stock drops. So I would say platinum group metals is a pretty good opportunity. Both platinum and palladium are trading at about all-in sustaining cost. So basically, right now, the industry has no incentive to increase production or even produce in most cases. So I would say that the downside protection is pretty strong in that one. So platinum group metals are pretty interesting. I would say that probably the safest way is just to hold an ETF of physical platinum, palladium, or if you want some more torque, you can buy like a really high quality developer. But I wouldn't go to any of the like 10 million or $20 million market cap companies because they tend to be pretty rubbish.
Fair enough. I know that you were writing about it a couple of years ago or a year back or something like that, and platinum and palladium were both trading below the cost of production.
Yeah.
So yeah, so I guess the prices come up a little bit, or have some companies gone bankrupt to kind of bring those, average costs down, or what's the deal there?
Basically, the market has been in a bit of a turmoil because of tariffs and all the sorts. And that has pushed prices quite a bit up. Also, a year ago, there was like 30 times more short positions on palladium than long positions in terms of in the commodity market. And that has since been dissolved. So quite a few investors and institutions have been covering their shorts for the past year, and that has pushed prices up quite a bit. That said, prices have gone from, let's say, $1,000 an ounce to like $1,300 an ounce. And I have spoken to many insiders in the industry, and they tell me that right now, incentive price for new production is $1,700 an ounce.
Oh, wow.
So we are still quite a bit far from the incentive price. I would say that the average global cost of production is around $1,300 to $1,400 an ounce. If you exclude Russia, Russia is a bit of an outlier there. I would say that we have quite a bit of a way up, especially if you consider that mining is pretty much the nightmare of any economist because it never sits on equilibrium.
Right.
Mining goes from one extreme to another and then all the way back down. The chances of prices sitting at 1,700 are pretty unrealistic. I think prices will probably shoot from current levels to $3,000 an ounce, and then after a few years they'll crash again. So yeah, you can expect a lot of volatility going ahead.
Where can people go to learn more about you, follow your work?
I'm primarily on two websites. I'm on Twitter, now called X, and my handle there is at AAG Research. And I'm also on Substack, where I have my free blog. Anyone can access all my reports. And the link there is albertoag.substack.com. Yeah. Thank you so much.
Yeah, thanks a lot for joining us. It's been awesome to talk to you, and I hope to be able to talk to you in the future about some more of your ideas.
Thank you.